thumbs up, and thank you so much for all your support. We're going to begin with the child tax credit payments. So many Americans did not receive the full amounts, or they didn't receive a payment at all when they were supposed to. So please make sure that you claim all that money on your tax return, all the money that you were shortchanged. That's your money, and in so many cases, the government did a lousy job of distributing those funds out properly. In January of 2022, you're going to receive an IRS letter called the 6419. This is going to report to you the total amounts of child tax credit payments that you received in 2021. Keep this letter for your records. You're going to use that letter to recoup all the money that you were supposed to get and did not get on your tax return. If you were shortchanged and you normally don't file a tax return because you're not required to, then you're going to need to file a tax return. And make sure that the 6419 letter is correct. So I've seen so many times where the IRS, where they report to you bad or inaccurate information. So if you think that the payment amounts listed on your 6419 letter is not accurate, match it up to your bank statements or your records. If there are discrepancies, you're going to need to resolve it, but that's going to be for a different video. Stop! You're going to need to resolve it, but that's going to be for a different video. For the third stimulus check that was issued in March of 2021, you're going to go through a similar procedure. If you didn't receive the full amount that you were entitled to, then you're going to claim what you were shorted on your tax return. You're going to receive an IRS letter 6475 in January of 2022. Save this letter for your records. You're going to need it for your tax return. The IRS letter 6475, that's going to confirm the amount you received. And it's the same situation. If you normally don't file a tax return because you're not required to, you're going to need to file your taxes in order to recoup what you were shorted. And again, especially if you have multiple dependents, please double check that what you received matches what the IRS letter 6475 says you received. Don't let the IRS shortchange you again. I'm shooting this video in December, and I'm just trying to help people out. So with that being said, if you're in the stock market or the cryptocurrency market, you need to know three things. First, if you're single and your taxable income is under $40,400 a year, or if you're married filing jointly and your combined taxable income is under $80,800 a year, there's a 0% long-term capital gains tax rate, which means that you pay zero federal income taxes. If you hold a stock or a crypto for a year or less, it's a short-term capital gain. If you hold a stock or a crypto for more than a year, it's a long-term capital gain. If you have long-term capital gains and your income is below those thresholds, it's subject to the 0% long-term capital gains rate, which means that it's non-taxable. So let me give you an example. Let's say that you're up $10,000 on a stock and you haven't sold it yet. If you're single and you make $30,000 a year, you can sell the stock and you'll pay $0 in federal taxes if it's a long-term capital gain. So you might want to consider selling some long-term capital gains before the end of the year to have your gains tax-free. Because if you go over the income thresholds next year and then you sell it, then you're going to end up paying taxes on it. The second thing that you should know is that for stocks and cryptos, you can do tax loss harvesting. This is when you sell your losing stock or crypto so that you can claim a tax deduction on the loss. However, if you sell a stock and you rebuy it within 30 days, you're not going to be able to claim a tax deduction because of the wash sale rule. So if you sell a stock on December 31st for a loss and rebuy it in January within 30 days, you cannot claim a tax deduction. The brokerage accounts, they issue your tax form, the 1099-B, by February 15th. So they're going to be taking this into consideration on your tax form. Third, the wash sale rule does not apply to cryptocurrencies for the tax year of 2021. This is most likely going to change in 2022 and onwards, but currently it's not applicable. So take advantage of this while you still have the opportunity. And just so you know, I have many detailed videos about taxes on stocks, taxes on cryptos, short-term capital gains, and long-term capital gains. So please be sure to check those out. Moving on, If you're going to be making charitable donations, please do so by December 31st in order to claim that as a tax deduction. If you don't itemize your deductions and you're just claiming the standard deduction, you can deduct monetary charitable contributions up to $300 if you're single and up to $600 if you're married filing jointly. If you're going to be making donations anyways, please do so by the end of the year to claim that as a tax write-off. When it comes to medical expenses, you can claim those as tax deductions if your out-of-pocket expenses exceed 7.5% of your income. For example, if your income is $100,000, you can deduct medical expenses if they are more than $7,500 in total, which is 7.5% of your income. So I want people to know that 1 out of 5 eligible taxpayers do not claim the earned income tax credit. This is a tax credit for lower income individuals and families. If you're single with no children, you qualify if you make under $21,430 a year. If you're married with children, you can qualify if your income is under $57,414 a year. The qualifying income threshold, that's going to depend on how many children you have and your filing status. The credit, it can be up to thousands of dollars. For retirees, required minimum distributions, or RMDs, have been reinstated for 2021. They were suspended last year in 2020. Check on your RMD situation because it's now different based on your age and which retirement plan that you're dealing with. Failure to take out your RMD will result in penalties that can be up to 50%. For unemployment benefits in 2020, the first $10,200 were tax-free. In 2021, that is no longer the case. If you received unemployment benefits in 2021 and did not have taxes taken out, or you didn't have enough taken out, prepare for that to eat into your refunds or potentially you owing money to the IRS. So just keep that in mind and be prepared. So I'm not going to cover